YouTube. So we're back again with another video today. We're going to be going over market structure. Now I'm going to show you how I draw my zones on a daily time frame, weekly time frame, as well as a monthly time frame in order to get a higher time frame bias when swing trading. And this also allows you to have a multi time frame analysis. Let's jump straight into it. So as you can see here, we've now got trading view open. We're going to pick a random pair. Doesn't really matter at this point. Let's pick NZD USD, for example. And what we're going to do is we're going to use the bar replay tool and we're going to go sometime in price. Let's do 2019. And we should be able to still get a 4-hour time frame here. Perfect. So this is the time frame we're going to use. We're going to start off with a daily time frame. And of course, we're going to go to the weekly time frame and monthly time frame in order for us to get our multi-time frame analysis, in order for us to actually execute the trade, obviously on the 4-hour time frame. If you don't know the strategy is going to be below in the link in the description, so you can check that out. Now what we're actually going to do here is we're going to wait for a setup to occur, right, as part of the EMC strategy. And this is on a daily swing. Of course, you can do this on other time frames as well in order for you to get your multi-time frame analysis, and I'll put that up over here so you can see what time frames you would use for your multi-time frame analysis. Now once you've got that written down, this is now how you execute that multi-time frame analysis. So you're going to wait for that impulse and correction to occur, right? And obviously that impulse needs to break a level of structure. Now as you can see, we've now broken these highs over here, right? And I'll show you exactly why I'm drawing my zones like that in a moment. So you can see we've broken this level of structure over here, this resistance area, and we are expecting a pullback. Now of course this wasn't a setup because we did not have two minimum retracement candles in the opposite direction. We had one followed by a bullish candle, so therefore this is no longer valid. So we're going to skip that and move on to the next one that we do see. So we can see we've got this bearish impulse that breaks a level of structure just about, right? We've now got one retracement candle and it now becomes invalid because it's giving us a bearish candle, so it's no longer a retracement candle that we needed. So we're going to keep going. So now we just broke another high over here. We do have a daily resistance area over here, but not too concerned about that area just yet. Cool. Now we've got two retracement candles. Perfect, right? Now this is where using the multi-time frame analysis can also help you stay away from certain positions, even if it looks like a setup, right? Because not every setup, not just with EMC, just in trading in general, not every setup you see is going to be a clean setup, number one. Or number two, it's not going to be a setup for you to take because it's the higher time frame is actually in the opposite direction for you to take it. So if you're buying on, 1 hour time frame, a 15-minute time frame, a 4-hour time frame, but the overall higher time frame is bearish, you don't want to be buying whilst the higher time frame is bearish, right? Because higher time frame tells you the overall story of what's going to happen in the market long term. But of course, if you're trading on maybe the 1 minute, the 3 minutes, the 5 minutes, you can catch those quick scalps. This won't really affect you. But if you're trading on anything as higher as a 1 hour time frame, so anything from 1 hour time frame above, this will affect you. Okay, so we did get our impulse and correction and price did go towards our TP, right? But let's just see whether we would have got involved in the position or not, right, as per the strategy. Now when it comes to drawing zones, what I typically do is I look for a resistance area. And now how I draw my zones is, you see this massive fractal over here, I will draw it from the body, the bottom of the body to the top of the wick if it's a resistance area, right? And of course I'm waiting for that resistance area to break, and I'm waiting for the pullback to come back to that resistance area to act as a support level in order for price to continue to go up in a higher direction, right? That's rule number one. Rule number two is when I see that the impulse starts inside the box, I tend to actually refine the box and I have it so that the impulse or the wick, right, starts from outside of that area. And that's exactly what I just done just now. So now I've refined it a little bit so that I can actually see where the impulse starts, which is a good thing, right? This is it over here. So now that I've got that impulse, I'm going to measure the correction. And of course, we've got the pullback. There is a grading method that I use in order for me to determine what's an A+ setup, an A setup, a B setup, a C setup, and a D setup. Me personally, I only take A+, I only take A's, and I only take B's, right? Those are the only type of grade setups that I take. I don't take anything less than that. Grading system for this would end up being an A setup. So from here, we've got the impulse, we've got the correction, no problem. We'll go to the higher time frame. So right now, since we've already got the impulse and correction that looks like it's going for buys, we're going to say that the daily is actually bullish. We go up to the weekly time frame, and what I tend to do is I look for any areas where our TP is currently at, especially where our current setup is also at as well. So I'll look for a resistance area, or I will look for a support area, depending if we're buying or selling, right? You'll pick whichever one is most accurate. So we have a resistance area over here, which also lines up with this fractal over here. So this will become one big area as a resistance area over here. So that is literally the only area that I need to focus on. Why? Because that could now tell us whether price is going bearish or whether it's going bullish, right? So I'm not just looking at this candle over here. What I'm actually focused on is, where does our TP take us to? Does our TP take us into a resistance area? Yes. If it does, I'm happy with that. I don't mind, right? Because the way I see it is, price can always tap into a resistance area, a higher time frame resistance area, again before it completely reverses. So I'm hoping that my TP gets hit before it reverses. Same with sells, right? If it sells into a support area, I'm hoping that it hits this TP, yeah, right? Because I'll be at break even at that point anyways. I hope it hits TP before it completely reverses and go in the opposite direction. So does my TP lie within inside a higher time frame area? Yes, it does. So therefore, I'm still looking at this trade. That's also another rule, right? The other rule is, where is our current setup? If you think about it, price is actually just tapped into this resistance area over here on a higher time frame in order for us to get this 2 retracement candle fallback, right? So it's not overall bearish on a higher time frame. It's not, right? Price has given us that rejection, which now leads to the daily 2 retracement candles, right? The only time price will become 100% bearish is if it closes below this area here, where I've just drawn this red box. If it closes below this area here, then we could determine that price is actually overall bearish now, right? But of course it's not for the time being. So that will be the weekly time frame. So the weekly time frame, in this very moment in time, you could actually say it's still bullish because it hasn't actually closed below the last weekly low. The last weekly low is actually this area down here. All right, the last weekly low is this area down here. So therefore, you could say price is actually still bearish, just off of how I just explained it just then. Next thing you do, go to the monthly time frame. On the monthly time frame, you do the exact same thing. You look for any areas where price may decide to turn around. And of course, we have this massive area over here. Now, since I think we have this massive area over here, because we have this fractal over here that I just marked up, and then we also have this one over here. So I've just joined the two together. Now, since we already have the weekly fractal, which marks up with this area over here already, guess what? I can reduce this one and have the monthly. Let me put this back. So I can have the monthly one here, right, which is still valid, and I can have the weekly one here, which is still valid, and it's the same exact zone. So for the monthly time frame, yes, in previous time, back in 2018, back in October 2018 and May 2019, we did create a low, right? But in this very moment in time, just off of this candle alone, we are actually bullish. Of course, we are now retesting this area, so we could go bearish at some point. However, if you look all the way to this side over here, what do you have? You have a massive support area, which is why I said the monthly is also bullish as well, because I just looked at the candle, I knew where price was, I understood how the monthly time frame, the weekly time frame, both tell the story for the daily time frame, right, in relation to how the setup could form out to play. And that's all I need to do. So now that I've seen that, I've got all my time frames aligned. So the daily is bullish, the weekly is bullish, and the monthly is also bullish, right? Although on a higher time frame, it looks as though it's creating bearish price action because of that retracement candle that was formed on the daily time frame. Don't forget that. So now that I've got the impulse and correction, all I need to do is adjust my Fibonacci to the bottom of where the retracement candle could end. I'm hoping that it ends in this area. Drop down to the 4-hour time frame, and of course, from this area over here. So from this area over here, I am now looking for a break of the 61. So I'm looking for price to break the 61 like that, come back, retest it, and I'm aiming for the -27 for our entry. So let's see what price does. Okay. So there we go. We've got a break of the 61.8. So I'm going to put my entry over here. Stop loss a few pips below the 88. And I'm going to target the -27, right, to get a 1 to 3. So we got tagged in, right, which is a good thing. Straight away, minimum drawdown. Okay, there we go. So we suffered the drawdown. Price is now at break even. Of course, if you know the strategy, that would stop you out at break even. Again, it depends on where you would have had your entry. If you had it directly at the 61.8, yes, you would have been stopped out. If you had it at the bottom of the fib, technically speaking, you would actually still be in this trade anyways. Of course, now we fully got stopped out. However, we're not 100% done, because now that we got stopped out, price is actually still respecting this area completely. So we can adjust our fibs if we really wanted to, and just wait for price to break that 61 again, and you just go again, right? You give it another chance if you really wanted to. There you go. So we got tagged in again. What's price doing? So break even again, depending on where you had your entries, you might not have actually got stopped out. There will always be two entry types for this. Again, price is bouncing around. As you can see, everyone got stopped out at this point at break even. We didn't actually lose. Well, we lost one trade actually. We lost one trade. But as you can see, everyone's getting bounced around, and then finally it hits TP. So that's how you would do it for that one. We're going to find another one because that was a bit shaky. So as you can see, I now have a level of support here. Previous support. This is previous support, right? This is why you got the fractals. Red fractal for me would mean a level of support. So I'm waiting for that level of support to be broken. Price comes back, retests it, acts as a resistance area, and then also pulls back in the opposite direction in order for it to keep selling off as well. So that's what I'm looking for, right? And then the same would be for the resistance area. So I'm waiting for resistance area to be broken, right? I'm waiting for that area to be broken, for example, to pull back and to go long, right? That's what I'm looking for exactly. So in this case, since we have a bearish impulse which broke a level of structure over here and pulled back, this immediately would be this will still be an A setup for me. So I'm good on this one. I'll definitely take this. So that's the daily time frame. I'm good. Now, when it comes to the weekly time frame, as you can see, we have a resistance area over here, previous resistance area on the weekly time frame. And straight away, as you can see, that previous resistance area is, it was a resistance area, broke above, acted as support in one previous time, January 2020, and then it wicked up a bit, price broke below. So now this red box becomes a resistance area to go lower. And of course, our TP is before this other support area over here on the weekly time frame. As you can see, our TP is all the way here. So I would definitely still take this position to go lower, right? Because there's nothing obstructing us. We also have a monthly zone all the way down here, which is way, this is far away from our TP. So therefore, I'm not really worried about it. If I was worried about anything, it would be this area here. Again, yeah, I'm not worried about that. Even this area here, for example, I'm not too concerned about this, right? Because we've broken this. Well, as you can see, we had one rejection over here, acted as support, rejection over here, acted as support again, broke below, brought back above. I'm not expecting this area to hold, right? So I'm expecting for our TP to get hit before it decides to completely reverse, right? So remember that. I said that. So let's play price and see what price does. So with this setup, daily is bearish, weekly is bearish, monthly is a mixture between bearish and also bullish, depending on the areas that you're drawing, right? As long as you have 2 out of 3 of the time frames that align, right? You want to use 3 time frames. For EMC, you want to use the daily time frame as your setup time frame for swings. You want to use the weekly and the monthly as your 2 higher time frames, right? For any other strategy, it would also work the same way. You want to use 1 time frame as the time frame that you use for your setups, right? Then you also want to check the 2 time frames above that. And again, I'll put it up across on the screen now so you can see the time frames that will plus as your higher time frame, depending on the time frame you're working on, right? Your entry time frame doesn't matter at this point, right? Because your entry time frame has completely different requirements, right? So let's work on this then. So we have There we go. So we've got that retracement. We adjust our fib, right? And I can actually get rid of this red box now because that was the weekly time frame. And I'm just going to wait for that break of the 61 to the downside. There we go. So we've got a break of the 61 to the downside. I'm going to put my entry here, stop loss here. I'm going to target leg at 27, get it 1 to 3. All right. So we got tagged in just then. And I'll zoom in a little bit more. So we got tagged in just there. As you can see, we're at break even already. Price cost of 38.2. We're at break even already, so I'm going to adjust that. As you can see, price hit TP. So that was example number 2. And I can show you this on another pair as well, right? Let's just go to Euro LZD, for example. Actually, just do Euro Chef. I'm going to do Euro Chef. And we are just going to pick 2016. I can't go back to 2016 because I can't do the 4-hour time frame. Let's do let's just do 2022 sometime. Yeah, let's just do 2022. Okay, here we go. So we've got an impulse to the downside. We've got a support level area, impulse to the downside that broke a level of support, pulled back, acted as a resistance, right? So it's definitely touched it. Impulse correction. And now we just have to check our high time frame. So we've got the weekly time frame already. You can see this is a support area on the weekly time frame, and you can see prices already below it. So we know we are going bearish, right? For the time being, not long term, for the time being. As you can see, we've got this long wick as well. Some could say this is a massive support area, which is true. However, this wick has to get filled at some point. So therefore, right, I would still continue selling, but not too deep. Being that we're already in the beginning area of the support area, I could continue to still sell, right? And as long as, you know, it gets maybe 50% of the way, then I would still consider. If it goes beyond 50% of the way, I wouldn't consider, because this is a massive wick on a monthly time frame, right? So this level over here is strong. So realistically, you want to actually stay away from areas like this. However, seeing as how I see the markets, I will definitely continue selling, because we are actually just in the beginning area of the monthly time frame. Bearing in mind, don't forget, difference between the daily time frame zones and the monthly time frame zones is massive, right? There's a huge gap. That's a lot of pips in between. So therefore, I will continue selling, right? So straight away, daily time frame bearish, weekly time frame bearish, monthly time frame. Just because of that wick, we could actually turn around and say it's bullish. But remember, 2 out of 3 minimum time frames match up. As long as those 2 match up, you can actually not go wrong taking setups like that. Of course, the perfect setup in an ideal world would be 3 time frames out of 3 time frames all matching up together. However, the market will never present a perfect setup to you, so therefore you need to have some level of contingency, right? As long as you got that, you can't go wrong either. Of course, do your due diligence, do your back test, get those statistics. If you're confident with it, take it, right? So that's what we're gonna do. Let's wait for that impulse to the downside to break. Yep, pull back, there we go. So we're gonna adjust our fib. We're gonna wait for the break of the 61.8. There we go. So we got a break of the 61.8. Straight away, I'm gonna put my entry a little lower because price just kept dropping. So I'm gonna put my entry a bit. Sorry, I'm gonna put my entry a bit higher. Price kept dropping, so hopefully this will do it. So we nearly got tagged in. Funny, yeah, we nearly got tagged in, right? Like 1 pip shy, which is exactly why I did that. You know, but let's continue. So we're already at break even anyways, and prices kept dropping. Boom, TP hit, just like that. That's how you do a higher time frame analysis. Use all time frames and understand how the higher time frames reflect to the daily time frame, which is the setup time frame that you're looking at. If you can read that story, you can't go wrong. The price action always tells you what price wants to do. And last but not least, I'm going to show you why I draw my zones the way I draw my zones. If it's a daily candle, I draw my zones from the bottom of the candle to the top of the wick, right? I draw it like that. And if it's a bearish candle, then I would draw it from the top of the candle or the top of the body to the bottom of the wick. On the daily time frame, I use the body and the wick, exactly how I just shown you, right? On a higher time frame, so the weekly and the monthly, I only use the wick on those time frames, right? And the reason as to why I only use the wicks on those time frames is due to the fact that those time frames are so big. By the time you drop down to the smaller time frames, you're going to have one massive area and it's going to throw you off your bias completely. For example, you have a weekly resistance area over here. Yeah, that's how I draw it. I just draw the weekly resistance over here, and of course, if I see another fractal, I'll just completely drag it across and match it together. If I was to do the body to the wick, for example, like this, when I go down to the monthly to the daily time frame, I have a massive area like this, and then when I go down to the 4-hour time frame, I have a massive area like this as well. That's too big. Your bias is going to be completely thrown off because you've got a massive area and you don't know what to do with it. And then same thing on a monthly time frame. Look, this is a massive area already with a wick. The monthly wick looks fine on the weekly. When I drop down to the daily time frame, it starts to get a bit bigger. When I go to the 4-hour time frame, you can already see this is a monthly resistance area as a wick. So you can only imagine, if I was to include a body on, let's even say this one here, you can only imagine what would happen if I include a body of a wick on the monthly time frame to the 4-hour time frame, right? Look at this massive area. That's an entire area. Look at it. That is price action that you could have used, but you skipped because your bias was completely thrown off because you had a massive area. So don't forget, daily time frame, body to wick, higher time frame, wicks only. Another thing as well, when it comes to using these fractals, of course, when you're looking for the setup on the setup time frame, right, so the daily time frame, you want to look for that impulse that breaks the fractal, right? And you want to take that one specifically. So for example, you had this massive impulse to the downside that broke this fractal over here. You want to take this one. Of course, if it continues to keep going in that same direction with the impulse before the correction, and it continues to break other fractals, so like this area here, for example, right? Of course, draw that one out as well. And then last but not least, well, actually it stopped about here, right? So in other words, it would just be these two areas here. Now, since you have two areas, right, and you don't know which one to pick, you can actually get rid of this one and you pick the first fractal that it broke and you marry it with the last fractal that it broke. So therefore you have one area entirely on the daily time frame that you're expecting for price to pull back to, right? That's the rule for the daily time frame. When it comes to using fractals for the week higher time frames, in order to find those resistance areas, you don't want to go too far back. You just want to find the most recent area that is very close to where price is, as well as where your TP is. Nothing else more than that. It's as simple as that. Thanks for tuning in. Don't forget to like, subscribe, and comment. See you guys another time. Peace.